Hello again, everyone. It's Vince Ford from TradeWinds.com, and this is our update for August 27th, 2017. Let's take a quick look at how the markets finished off last Friday. We saw stocks close mostly higher on Friday, although they did fade into the close. If you have a look at the Dow here, it did finish about 30 points higher. Had actually, though, intraday gotten right back up to that 20 period moving average before fading into the close. The S&P 500 managed a gain of about 4 points, also fading into the close. The Nasdaq actually lost 5.5 points and closed near its lows of the day. And the Russell 2000 managed to gain as well. That one was put in a pretty indecisive candle on Friday. Now, bonds moved higher by about half a point. So did gold. Gold was up about 4.5 points. More importantly, gold did the opposite of stocks. In other words, got just below that upslope in 20 and then bounced significantly here, that put it in a nice reversal candle. So bigger picture, if we look at this area here for gold, the range that it has been in for several months right in here, this makes a breakout of gold much likelier here. A breakout to the upside, that is. We have nice strong momentum behind this move. We have a nice strong reversal candle on Friday. Any follow through here above Friday's high, and I think we get a nice breakout. And you know, as channels go, when you do get that breakout, one of the things you can do is measure the length of that channel, and you would expect a move in that direction of about the same proportion. So if that's the case, if we do get a confirmed breakout, there is plenty of room for gold to run to the upside from a technical standpoint. So another thing to keep an eye on, crude on Friday moved higher by about 43 cents or so. You can see we still have negative momentum though. The dollar, whether you look at it against the CAD pair, or against the on the other group of currencies here using the dollar index chart, you can see that we're dropping substantially. We actually put in a fresh new 52-week low at 92.42 for the dollar. But also, if we look at the bigger picture here, it looks like we could be in for much more downside. I mean, we're right at that area of support here. And the fact that we closed near the lows on Friday, this is a weekly chart, so this is a weekly candle, and we closed near the lows of that week, you know, making this even more bearish. And if we clear this level of support, we really don't have much support until we get much lower. There's a minor area of support near 89.5, another minor area around 86, and a bigger area around 84.42. One of the things you can do to identify areas of support is just look for those areas of congestion, either like this, where you get a lot of candles in the same range, or just look at those previous lows and highs. So, you know, we can mark these previous highs as we go lower here, these peaks. And of course, the more touches you get along the same line, like this one has one here, another one here, and these lows here, these are more significant areas of support on the way down. But you can see that from this area in here, between those areas here, there's very little support. So you know, we could potentially move from 92 to 84-ish area fairly quickly, which really would be very significant, considering this is a dollar we're talking about. Also this week, from a news perspective, not a heavy week on news, but it is an important one. Is Wednesday we get the ADP employment number out, and on Friday the employment situation report. So as you know, the Fed keeps a very close eye on those numbers to determine potential future rate hikes. So those are going to be important to look at, as will the dollar, gold, and of course to see if there's any continuation of a move lower for these index charts. But right now, as you can see, the daily charts are starting to roll over, and this is something to definitely keep an eye on. That's about it for now. Enjoy the rest of your day, and we will see you on our next update.